Good evening, folks. This is a review on the British pound. We are not looking at the dollar index, and we will not be looking at euro dollar tonight. I will focus all of our attention on this specific pair. Reason being, the focus was going to be on studying the volatility relative to the Parliament vote that was slated for today relative to the economic calendar we covered yesterday during the Monday commentary video. Looking at a daily chart here, I do suspect that we'll probably want to run these highs still. We got real close to it, and I'll show you what it reached into here in a moment, but it might need to come back a little bit, and we'll look at some specific levels there in a second. But the underlying tone for cable is still highly manipulated, so you have to be very careful. We mentioned right in here that we would see cable rally and go higher. We've seen several hundred pips run since then. This, to me, right in here, this just looks very it's a alluring section of price action in here. It looks too clean. So if we look at it in relative terms to this high and this high, it's basically equal highs, the way I define it. So will it get all the way back up to here? I don't know, but this certainly looks like a good draw on liquidity, again, for a long-term idea or premise. And it doesn't mean every day is an up day. It just means that that's where we will probably see long-term draw on liquidity relative to large fund positions. So it's had a very short run in terms of time getting up this far, and to me it just looks very hungry to want to go higher. So we could be looking at possible scenarios to catch some kind of a discount on this. And right now I don't see it yet, but we'll look at the lower time frames and review what took place today. Let's take a look at the higher time frame. So this is where we stopped at, and I want you to take a look at this candle here. This is our last up close candle. So this is our parent price swing, this high down to this low right here. There's our parent price swing. So price has reached up into this premium right here. So everything inside this candle is the underlying context until this candle's breached. In other words, it has to go through this candle before we no longer consider it. Right now, this is defining the dealing range relative to the intermediate term swing on the daily chart. So this up close candle, what I did was I put the high and the low with a fib, measured it as your 50% level there, and also notice that it's essentially the 50% level of this candle here, and it's also the high formed on this candle. Interesting, isn't it? So we have several mean thresholds in response to this upward move seen here. Traded lower, drop down into an hourly chart, keeping everything as it is. Okay, so we see a nice little response there, traded into a consolidation as we talked about during Monday's analysis and commentary video for this particular week of trading. Again, we are not trying to do anything this week. At least I intentionally just gave you that as a drill, exercise patience. Some of you already executed on some ideas, and that's fine, but try to stand down this week. See if you can do it and try to avoid doing anything in the marketplace. We have the FOMC tomorrow, and then we have non-farm payroll. So it's really not much in terms of very low risk and clear-cut opportunities. So we'll leave it at that for this discussion. Price in here consolidated, initially dropped lower, enticing shorts below these equal lows, and any longs, they were stopped out. They sent price on a protractionary state up higher, traded back into this area of liquidity. Bearish order block, sold off, went lower, attacked the liquidity resting below this low here. Also notice that we have this candle's high at 130.57.3. The low of this candle is 130.55.3. So we went right into this order block here. Let's see what the open is on that. 130.50.2. So it didn't quite get down to the open, but it certainly went down and touched the top of that candle. If we just use a horizontal line here, drop that on there like that, you can see clearly we hit that. Now I'm going to drop into a 15-minute time frame, give you a little bit more context as to what you should be noting on your charts. Now obviously I didn't take any trades today. Nothing has changed in the account. I haven't taken any trades. You can see here. Okay, so accountability is out of the way. We have, again, the order block being denoted here. Price traded down into that. We had a little bit of bounce so far. A small little fair value gap in here. Watch this tonight. This might be a point of study to see if we can get up into this. Sell side imbalance, buy side inefficiency right in here. So we can see it probably trade back up into that. And it also would give us a nice little premium for a continuation on the downside to make a run deeper on this relative equal low here to what we saw is yesterday's low. And then maybe stretching a little bit to try to get these equal lows up here. So we have a little bit of a liquidity pool resting around that 130 big figure. Let's see what the low is on this candle. Low comes in at 130.11. So yeah, I would say 130 big figure. If we can stretch down that far, if it does, we could see another sweep of 30 more pips below that. So 129.70s could be an objective if we get some kind of a continuation on the theme of Brexit stuff. So anyway, like I said, I'm going to err on the side of caution because I don't understand Brexit or the ramifications if you guys stay in or get out. So I'm showing you my willingness to just admit that I don't know something. Usually you hear me talk about everything I know or what I believe to know, but I don't understand the Brexit. So therefore I respect the underlying risk that's associated with that. All right, so let's get in here and take a closer look at what has transpired. I'm going to go into the notes that I've had on this for tonight, and we have that here. Okay, so I'm going to try to do this so it makes the videos a little bit shorter instead of you watching me do all this annotation. So we have this calibrated breaker, and again, what that was is this over here. We talked about this during the Monday lesson. Okay, so the portion of teaching in yesterday's video, if you didn't watch that and you're just watching this video tonight, stop the video right now and go back and watch yesterday's video because it's going to help you, and it probably would be beneficial to watch it again because you probably didn't remember or even pull out the salient points that I wanted to utilize in today's price action video. So again, we talked about how this was a breaker and the framing of it and how to calibrate the levels to anticipate specific runs to key off entry points. So we calibrated to 130.40 to 131.30 and then 31.35, the midpoint 5 level. So whenever we're looking at a point of interest for price action where there should be a setup forming, and let's say we're above the marketplace and we're coming down to it, the theory is we want to use the closest level, 0 or 5 level, because we have to factor in the spread. Now, when we're looking at like futures markets, you don't have to be so, I guess, have so much of a finesse with picking your entry points because everybody's price essentially for futures is pretty much the same price for the most part, unless you're getting some goofball brokerage firm. So if we have Forex, everyone's going to have a slightly different varying high or low or close or open because of that inherent nature to what Forex is. It's a spread business. And because the liquidity pools that are offered by the brokerage firm, they have that liberty made available to them. And your liquidity pool is not going to be the same liquidity pool that I or 15 other people in our community would have. So to overcome that, my entry technique, much like my exit strategy, is the low-hanging fruit theory. So whatever the closest point of entry is, you're going to see that we're only talking about a 10 pip variance here relative to the breaker. Again, watch yesterday's video and you'll see what I mean by that. But either one of these levels, if you are trading down to it, okay, if we trade down into that level like we see here, there's nothing wrong with going into the market with the 40 level. So 31.40, if you were trying to buy that to do an exercise to run up to get the stops above this high here. Now again, these are relatively equal highs, but I'm going to use this one as the point of interest for the draw and liquidity. This is where the stops are going to reside. Even though these are relatively the same, I'm going to more or less look for the highest one and then do my scales of 10, 20, and 30 pip sweeping above that. But trading down into the 3140 level, if you were to buy that, there's certainly nothing wrong with that and using a 30 pip stop because we're trading in London essentially. And if you entered here and used a 30 pip stop, your stop would be way down here, and try to get up here and run some liquidity above the high here. Why this high? Well, if you just look at the price action in here, we've consolidated. Remember we were talking about how it was coiling in here? Price did a false run here initially. Okay, so there's a little bit of an enticement on the downside. All they're doing is working the Asian range, and then they sent price higher above the Asian range and then back down in the middle, and then sent it higher for the real run on liquidity during the New York session. The runs on these equal highs, we saw that occur during the New York Open. If we look at the opening on cable for this particular day, you can see that we do a standard 33 pip protractionary measurement above to kind of get a feel for where IPTA will most likely reach for. Now, again, 33 pips is just like a general rule of thumb. It's very close to what we got as a high, and that's fine. If you just had that, that's way beyond what retail expect. But we have this protractionary run here up to 10 pips exactly above will give us this level here. The high comes in at 31,991 for this feed. So to get a 31,963 level as a projected high, just using the 10 pip stop sweep, grading our sweeps for 10, 20, and 30 pips, that is enough. So price by itself reaching to this level, that's just one piece of the puzzle. We also have the level down here. If you were really gung-ho and you wanted to see if you can get a run to 31.30 and try to buy down there, you can certainly try to do that. But obviously, each one of these prices, you have to factor in roughly about 3 or 4 pips of spread. I just simply use a general rule of thumb, 5 pips. And I just don't finesse around with any more than that. It helps me just make it very objective. I don't look for any reasons. And now you just missed it. You probably didn't even think about what I just said. I just gave you my exit strategy and entry strategy. If I like a level, I'm adding 5 pips or I'm subtracting 5 pips if I'm looking for an objective to sell short in or exit on targets. You got to be paying attention. So if you have these levels, like we've calibrated them yesterday, these were very specific levels, and I gave you the reasons why and what the thought process was around it. Price dropped down into the 30 level. It went as low as, I think, 28. Okay, so 28.8, basically 29. You can see not even two pips. It was just basically 1 pip variance from the level we called and calibrated yesterday relative to that breaker on the 15-minute time frame. So because the consolidation in here, we traded off of this level here. Now, in hindsight, we did not execute, or at least I didn't execute, but I gave you the framework on how these setups would likely form. During the initial drop down in London, price traded to this level, and you may not have seen this or had the moxie to get in there and trade it. Price runs through this short-term high. What do we have here? Break in market structure here. We are now back below the opening price right in here during the New York Open, right in here. And if we take our fib, this is what the standard practice is. You get the low, you draw it up to the high, and there we go. Price hits a target, 127 extension, or in this case it would be negative 0.27. That would be your target 1 objective. I'll show you the fibs because you're probably going, oh, can you show me what the fib settings are? This is what I have right here. There's our targets. Levels real simple. Okay, and why am I using that? Where did I get those levels from? This is like a little bit of a history lesson. And I can do that because I did a lot of the annotations already. See, yeah, I'm still gonna make this video long anyway. So we got a history lesson. And where did I get the targets for the fib? I didn't see it in a book. I didn't do any of that stuff. What I did was I looked at Larry Williams' target shooter. He used to use this like little, back in the day, and they probably still use them in teaching for like public schools and such. Maybe colleges still use them. There was like a projector, and you would take these clear plastic sheets with like notes written on it. So you'd lay it on top of this projector, and it would project it onto the wall so the students can see it all, a magnified form of it. Well, he gave in his course Larry Williams Confidential Futures. Let me say it right. Larry Williams Confidential Future Millionaires Trading Course. Okay, it was a VHS course. It was 4 VHS videos. It came with this little plastic overlay you can put on your charts, and I did the math on it, and it arrived at the same levels I just gave you here. So it's basically the fib levels just added to a specific range, and it's really, there's no magic to it. And then using angles, and I just figured that out through GAN. That's to me how he did his target shooter. So he doesn't talk about that anymore because everything's electronic now, but that's where I got the levels from. So I didn't create these or come up with these on my own. I did some math on how to figure up the same levels using just a Fibonacci with Metastock back in the 90s, and then used Supercharts, which is another platform I had, and then TradeStation. And then obviously you see me using MetaTrader 4. So it's all the same stuff. You don't even need the Fibonacci if you just get the low value and the high value and multiply that by one point, where's it at here? Do the math by 1.27 and or 1.62 and add it to or subtract to relative to if you're projecting up or projecting down, and that'll give you your level. So you don't really need, you just need a calculator, or if you know how to do quick math on a scratch pad, you should always have paper and pencil next to you when you're trading. You can get these targets determined rather quickly. So that's what floor traders would do anyway, because they don't have that access of having charts in front of them. Everything was a number-based practice. So they did all their like pivots and such, floor pivot numbers, and they could also do fib calculations on the floor. They didn't need to do charts. And a lot of the newbies that get into technical analysis today, they think they're leading the industry because they're not really. They're just doing old school stuff with new technology. All right, but this is the retail way of doing the Fibonacci. I teach that you want to use the bodies of the candles in here, and we'll drop this down right in here to the body close, and you can see here's target 2. Uh-oh, look at that, perfect. You don't get that in books now, do you? So there's our ICT perception on fib use, and you can see a beautiful optimal trade entry right to the pip, right in here, 3/4 pullback inside of this down close candle. What do you think that is? It's a bullish order block, picking up more orders. There's a buy. Practice in hindsight. You didn't take the trade. I didn't take the trade. This is what you did. You annotate it on your chart, have this on your charts. You can see all of the framework and such, and a beautiful illustration to have for your study journal. Now, with that out of the way, let's get this off here. Price trades up into the level, clearing the stops, 10 pip sweep. Also above 33 pip protractionary state from the open or Judas swing. Then price breaks all the way down in here. We have a break in market structure. We also trade below the maximum threshold levels of our breaker. So we had one punch through it and then 3 more candles in here. So it spent 45 minutes below it, or attempting to move below it, and then rally back up, doing a 10 pip run above the short-term high here. So that's what this is denoting, 10 pip run here. And then aggressive move where it gave up the ghost, traded down, and reached into that order block that we mapped out on our time frame. So all in all, it's a real good study to have, to look at and consider what took place. The time of the day, these are all late New York setups, And whenever we have like a FOMC environment, or obviously like we looked at for Brexit, the Parliament vote, that's going to be late in the New York afternoon because of the UK time translation. Whatever that time is that they would be voting and the counting the votes and all that stuff. We have to factor all that in, and that's what we see here. And to be honest with you, I don't even know what the vote results were, or if they even had the vote. I don't know. I haven't had a chance because I've been doing payments and administrative things, since 4 o'clock this morning. And right now it's a couple minutes before 9, so you guys can feel for what time it is while I'm doing the video. But that's it. We saw a break in the market structure. We saw the breaker break down. In other words, if the breaker would have been good, we would have had this run here. It would have been no more need for it to come back down into it because it hit the lower level of it. The fact that we went through it here was an indication that we had some weakness expected. And just to throw in, I didn't want to talk about the dollar, but you can see the dollar's held its range, and the euro dollar is in consolidation as well, because the move or the imbalance that's being forced in the marketplace is euro pound higher. And there you go. You got that right there. And I'll talk about euro pound tomorrow. I'll talk about euro pound tomorrow by way of a chart. I'll send a link to the forum. All right, so let's go back into our cable discussion. If you look at the overall market structure here, we've got a really nice little optimal trade entry right in here. So again, using our retail approach, just like the books teach us, this is what you end up getting. So here's our high down to our low using the wicks. Nice little optimal trade entry right in here. Nothing wrong with that. We use the ICT perspective, measuring the bodies. Right in here. We have, again, optimal trade entry, gets closer to that 79% trade level there, and also right up at the 10 pip run above this short-term high, and an aggressive run lower. Now, if I were adding another level on here, because if you want to get a full measured move for your fib, let's start by highlighting it properly. All right, so that's 0. So we want to do a -1. So -1, and this would be symmetrical swing. Okay, and that would give us a really nice objective on the downside. So basically all we're doing is looking at this move here and getting a measured projection of that same move projected lower from this low here. So this low to this high is essentially basically that right here. If you want to add more levels, you can do like a -1.27 and or a -1. Let's see here. I'll just add them for you. You guys can see it then. All right. We have negative -1.27. That could be a target level. Another 162. So we do a -1.62. And we can do whatever you want to name this. This is like the last expected target I would have. So we could do like final target, whatever you want to name it. On my YouTube channel, I saw videos I did like final curtain call, showstopper, all that kind of stuff, just to be funny. But that's what it is, and you end up getting essentially the low right in here with those projections. Okay, so nice little price swing here, just using that. I wouldn't get carried away with all those fib targets either, because I know some of you are going to watch this now because you're in the mentorship and say, well, ICT says he's going to hold for this. No, no. There's all kinds of things you have to factor in, and some of the things that you might have in mind that would be useful to expect those levels to be reached probably aren't going to be significant factors or salient to the current price action that's being seen when you're using it, rather. So hopefully you found this video insightful. And until I talk to you next time, which probably will be tomorrow, I wish you good luck and good trading.